Welcome, everyone, to the Cardano Effect podcast, episode 43. The purpose of this podcast is to take high-level developer information and projects that are occurring in this space and break them down into bite-sized, consumable pieces of information for everyday use. I'm your host, Philippe, and let's get this podcast started. So Rick and myself, we're the hosts today, and we have a very special guest who Rick will be announcing shortly. I want to get right into the mix of things. I wanted to say to everyone, whether or not you are subscribed, if you're not subscribed to the Cardano Effect podcast, please consider subscribing. Our viewership is increasing, and with this viewership, we're able to send invites to guests from various different niches of the cryptocurrency space and get as many diverse opinions as possible. And it's really been good. So you can reach out to us on Telegram, Reddit, Twitter. We're open to critiques, negative and positive. We appreciate it. Keep on sending in those comments. I want to remind everyone that if you missed the past two episodes, we had our live weekly recap where Rick and I do a live stream on YouTube and talk everything about Cardano, everything that happened within the week. And the episode before, we had Lars and Polina, and they just authored their book, Plutus, Smart Contracts and Cardano. And that's all about the smart contracting language that's going to be appearing in the Goguen era. Check out that episode, buy the book on Amazon, support the community. It was a wonderful read and a wonderful episode. So I'm going to get right into the mix of things because we have a very special guest today. And Rick, well, before we start that, none of what we say on this podcast is financial advice or should be taken as such. Remember, you are your best financial advisor. And if you don't think you are, you need to find someone who's qualified to do so. So with that being said, Rick, how you doing today? What's going on? How's Hawaii? What's happening?
Philippe, Hawaii's great. Thanks for asking. What we have today, we have Caitlin Long with us today on the podcast, and I want to get right into her bio right away. But briefly, I got a quick shout out to IOHK. Thank you for sponsoring this podcast. I'd also like to remind our viewers that this podcast is available on Google Play Music, iTunes, Spotify, iHeartRadio, and SoundCloud, and it's available on all of your favorite streaming apps. We're listed on over 40 different types of apps. If there's any app not available, let me know at our website, cardanoeffect.io, and I'll get it listed on your app. We're also working on some beta versions of other major providers out there. And once we work those out, we'll let you know. So getting to our special guest, Caitlin Long is here with us today. And I'm going to give you a quick rundown on her bio, and I'll link it down below in the comments section. Caitlin is a 22-year Wall Street veteran who has been active in Bitcoin since 2012 and whose passion is a fair and stable financial system. She saw inaccuracies in Wall Street's ledger system while running Morgan Stanley's pension solutions business from 2007 until 2016, holding senior roles at Credit Suisse from 1997 to 2007, and starting her career at Salmon Brothers from 1994 to 1997. She jumped into blockchain to try to fix these problems. And from 2016 to 2018, she was chairman and president of Symbiont, an enterprise blockchain company where she jointly spearheaded blockchain delivery of index data to Vanguard. Since January of 2018, Caitlin has volunteered in her native state of Wyoming to enact a series of enabling blockchain laws and is a gubernatorial appointee to the Wyoming Blockchain Task Force. She holds degrees from Harvard Law, Juris Doctor, 1994, the Kennedy School of Government, Master of Public Policy, 1994, and the University of Wyoming Bachelor of Arts in 1990. So welcome, Caitlin. Thank you for being on the Cardano Effect. How are you doing today, and where are you calling in from?
Thanks, guys. Hey, I'm calling in from Wyoming, where I recently decamped. I came back home from the East Coast, from the New York City area, to help build the burgeoning blockchain community here in my native state.
Yeah, that's awesome. So I noticed reading through your bio there, you were born and grew up in Wyoming, then you went to Wall Street in New York and you learned the ropes there of the whole financial institutions. And then you went back to Wyoming and you took all that knowledge and experience with you.
Yeah, indeed. It's been great fun. I feel like I can operate in both places, on the coasts and in so-called flyover country, where I think actually that the power structure of the coastal power, I think in the next decade or two is going to devolve and decentralize back to regular folks. And part of it is that these technologies are going to make that possible.
Yeah, that's awesome. So you're taking everything you learned in a big city back to the rural areas, and that's incredible.
Yeah.
One of the big things that you have coming up is the Wyoming Hackathon.
Yeah.
And did you want to talk with our viewers about that first off? You're very heavily involved with the creation of that.
Yep. I'm chairman of that event, and this will be our second one. And for all you Cardano fans, IOHK is a sponsor, and a whole bunch of developers, including Charles and Jeremy, are going to be there, not just speaking, but also mentoring and teaching classes in a developer conference right alongside the hackathon. So it's a hell of an event. Thank you to IOHK. I wore my I Heart WY t-shirt because I joked with Charles when they moved to Wyoming from Hong Kong. I said it should be IOYO, not IOHK anymore. And actually Jeremy went out and grabbed the URL. They're not going to rebrand, of course, but they are now a Wyoming company. And Charles, it turns out, has extensive family contacts here in Wyoming, I learned. And he spends an awful lot of time just south of where I am on his ranch in Colorado. But it's really wonderful. The IOHK folks are getting very close to the University of Wyoming Computer Science Department, and they're going to be doing a lot of things academically involving Cardano. And one of the other cool things about that event is that last year, a high school teacher from a tiny town in Wyoming called Shoshone brought 3 students down. I love it when teachers go the extra mile like this. They'd written a few lines of code. They were high school students, but they'd never really dug in. Well, they got mentored by engineers. They won a prize and they got mentored by engineers at the hackathon. Well, it turns out that they've now become big Cardano fans. So I've got to give a shout out to Tony from Shoshone, the teacher who brought his students down. And he's going to get a chance to meet Charles and Jeremy and the Cardano developers. So it's going to be a really special event because we've got a full range of very sophisticated developers and experienced developers. And then, high school kids who are just civs and taking it all on. But it's been fun for me to watch. So come on out to Wyoming. We'd love it for everybody to come on out. It's free. And the reason we're doing it for free is because it's a nonprofit event. It's not a standard, conference that's somebody's gig. I'm doing this all volunteer, and the University of Wyoming is giving us the space for free. And you have to register for free in order to participate, but it is open to everyone, both developers and non-developers alike. And it's September 19th through the 22nd. We're starting with a blockchain task force meeting, so you don't necessarily need to come on the 19th, but that weekend, beginning with that Friday evening, is when all the events kick off. And the winners of the hackathon get to compete in what's called the Sandcastle Challenge, and the top 2 Sandcastle teams end up going to Dubai 2020. I believe expenses paid. So it's a hell of an event. Last year, we paid more than $100,000 in developer prizes. And so, it's funny. I look at all these big events that have hackathons and look at their prize purse. The Wyoming event, actually, because it's nonprofit, has an even bigger prize purse. So come on out, Laramie, Wyoming, University of Wyoming campus, really September 20th to the 22nd. But if you want to come the day before, come on out. And by the way, we'll have cots for you too. Last year we learned a lot, and the feedback from the developers was great. They want to be able to stay the whole weekend. So we got the Red Cross to contribute cots. So if you can't afford a hotel room, don't worry, we've got you covered. And all the food, the feedback on that was great. University of Wyoming handled it amazingly well. And because it's in the brand new computer science building at the University of Wyoming, we're going to have perfect internet, they tell me. So the 3 things developers care about: the sleeping, the food, and the internet, maybe in reverse order. We got it covered. I think you're going to have a great experience. So come on out.
Oh, that's awesome. That is awesome. That is awesome. And then shout out to Tony from Shoshone, because he asked some great questions on the Cardano Effect podcast. And I believe,
he did?
yes. And he brought up that question. He brought up his students in the episode that we had with Lars and Paulina a couple weeks ago. So
that's great.
So that's wonderful that he's coming over there.
Love him. Yeah.
Yes. So let's transition to you. If people are not familiar with you, I mean, most people in the crypto space are familiar with you. You have a lot of clout in the space. Why Wyoming? Why is Wyoming the trailblazer for cryptocurrency regulation? Why is it the most friendly state? What is it about Wyoming that makes it so different from all the other states within the U.S.?
Well, Wyoming, if we talk a little bit about the culture, Wyoming has a history of bucking the system. In fact, the motto of the University of Wyoming is bucking the system since 1886. And so that tells you a lot culturally. We're innovators. We're not, folks who are trained to think within the four corners of existing philosophy. We actually buck the system, and we've done some really cool things in Wyoming. We were the first state to give women the right to vote, and Congress actually said, you can't become a state unless you withdraw women's right to vote. And they said, nope, thanks, then we won't become a state. And eventually, of course, we did. But we also invented the limited liability company, which is a business organization form that a lot of your listeners probably use. That was invented in 1977. Wyoming's the one that created that. So we have a history of being first. We have a history of doing what's right. And I think we also have a general philosophy of, as Trace Mayer likes to say, good fences make good neighbors. We've got very clear property rights, and we value the concept of self-custody, if you will, self-control, rugged individualism of our own destiny. And it fits culturally with Wyoming. Lastly, I would say Wyoming's one of those no income tax states. There's no state income tax here. And we actually passed one of the bills in 2018 was to clarify that there's also no property tax at the state level on crypto assets. So it's very tax friendly here as well.
Okay. That's wonderful. I had a personal question to ask you. Rick, did you want to say something?
Yeah, I was jumping out of my seat. When Sushi mentioned taxes, I was like, whoa, that's really awesome. That was the one thing is probably better for later in the episode, but I noticed in some of your writings, you talked about how the crypto in Wyoming is classified as personal property, and it falls under personal property. Are personal property taxes cheaper than capital gains taxes? Because other places say, well, if you sell it, you got to pay capital gains tax, or is there some advantage to that?
Yeah, obviously I can't give tax advice here, but just in general, the IRS is the one that gets you on the capital gains taxes. A lot of states also charge capital gains taxes, and basically if an asset is considered property, then generally speaking, you're paying capital gains taxes when you sell it. So what we clarified is that not only is crypto property, but it also is exempt from sales taxes in Wyoming because of the way we defined it. So really, you're not going to have the Wyoming taxman coming after you if you're in the state of Wyoming. The IRS is different, but at a state level, a lot of us pay. I lived in New York City for a long time. I paid 3 levels of taxes: federal, state, and city. You don't have the state and city taxes in Wyoming generally. There are some fees, to set up your LLC, obviously to cover the Secretary of State's costs. But even then, they're pretty small. Candidly, I've said to a lot of businesses, the instinct is go set up your business in Delaware. Well, go look at your Delaware franchise taxes and tell me whether it's really in your interest to set up your business in Delaware. It's a lot cheaper to do in Wyoming. And by the way, it might surprise your listeners, Wyoming's number 2 behind Delaware in terms of new business entity formations because of that history of setting up LLCs.
Okay. I have a follow-up question to that. So in your recent Forbes article, it was how can individuals benefit from the Wyoming blockchain laws? You talk about, you can keep your digital assets within a Wyoming company, or if it's in the state of Wyoming, it's free from certain level of taxation. And then we talked about the money transmitter law. So personally for me, this whole idea of like-kind exchanges for the past couple of years, in other states, you have to pay to swap from crypto to crypto at the end of the year. My accountant says that. And it seems like Wyoming is kind of progressing forward with this money transmitter law. So can you go into more detail about what this law means for the everyday crypto hodler or institutional investor?
Yeah, at a basic level, what we've done is say, look, crypto is property in Wyoming. And so if it's stolen, then it's theft. So the property theft laws apply. But more importantly, for commercial transactions, what happens is that the rights and obligations of the parties are very clearly defined under law, so that if there's a dispute, then judges have a roadmap for how to handle it. Now, you may think, gosh, this is a peer-to-peer market. Why do we want the legal system involved at all? And that's a very, very good question. And again, I like to invoke Trace Mayer's thought about this, which is technology's got to be backward compatible with the legal system. It really cannot exist in a vacuum, because the legal system, none of us live in places where there's no law, right? Unless you live on a seastead or something like that, right? Then where you've got a blank slate and the code can literally be law. We want the code to be able to execute law that is recognized as valid. And so we've got to make the tech backwards compatible with the law by having the law catch up to the tech. And that's what Wyoming has done. No other state has done that. It's very basic protocol level stuff. I use the phrase protocol level in the sense that, that the commercial law is the base layer of the legal system. It gets at the very basics of things all of us do every day, which is our commercial transactions. What are the rights and obligations of parties? And believe it or not, a crypto transaction is considered a commercial transaction, and you want it to be recognized by the law so that, let's say, for example, we've got a very active coin lending market that's just really exploded in size in the last couple of years. Well, how do you lend coins? You can't really do that on a blockchain, right? So that's happening off the blockchain. So now you actually then have to create a contract between the two parties explaining, how that collateral that is pledged for the loan is going to be recognized legally. And what Wyoming has done is very clearly define how you can do that, so that you can get liquidity for your assets if you want to pledge them as collateral for a loan. We've also defined how, if you want to custody it with a third party, so all the exchanges and the crypto custodians that are popping up, I'm a not your keys, not your coins kind of person, but I also recognize that there are institutional investors that we would love to have investing in this industry. That's how we're going to help fix Wall Street. So how do we actually have the securities that are issued on blockchains be able to be custodied by a third party without creating a counterparty exposure? Why can't I make my financial institution just like my valet parking garage or my coat check, where when I deposit my property with that entity, they don't legally own it, I still own it, and I've just given them temporary possession of it. And so they're just providing me a service for which I pay, but if they go bankrupt, I don't get caught in their bankruptcy. These are very simple, but very critical insights, and the only state that has recognized this is the state of Wyoming. I would also say we did something also kind of weird that the developers probably would consider weird. It's not weird from a legal perspective, but how do you define the location of bits of data? You can't, right? So one of the problems that the law has been struggling with is how do you know which law applies when data is literally, moving all around the world? And so we actually defined that you can locate your digital asset in the state of Wyoming if your hardware's here, if you've deposited it in a Wyoming custodian, or if you are actually a Wyoming person, and person under the law includes business entities that are Wyoming entities. So you actually can get the benefit of Wyoming law. I can't give legal advice to your personal situation, but you get the benefit of Wyoming law pretty expansively. And this was all designed to help advance the crypto industry broadly. We are neutral, incidentally, to any type of crypto. Our laws are written to expansively include all.
Okay, that was a great answer. Great answer.
Yeah.
Moving back to Wyoming and legislation there, I read there are a couple other states that seem to be starting to get the ball rolling. Are there any other legislators in other states that are reaching out to you and either white labeling what you've done in Wyoming, or looking at you as inspiration to start progressing regulation forward in their states?
Oh yeah, we've had 12 other states enact various versions of Wyoming's 13 laws. No other state's going to do all 13, right? Because Wyoming's grabbed the first mover advantage. So other states aren't going to do, the whole thing. But I call it the Rocky Mountain arc of states. This is truly becoming the crypto haven of the United States. It's, the Rocky Mountains are becoming the Swiss Alps for like Zug. And it's Montana, Wyoming, of course, and Colorado and Utah that have actually enacted significant legislation that recognizes the crypto industry. I'd still say, again, Wyoming's far ahead. And we also have the added advantage of the tax regime that I already talked about. And then we also respect privacy. Wyoming doesn't require LLC registrants to disclose who owns the assets in the state of Wyoming. So therefore, you can actually protect your privacy by owning these assets through Wyoming LLCs. So there are clear advantages in Wyoming outside of just the crypto laws that we recognized. But it's the Rocky Mountain states that are doing it. So don't be shocked if this sort of northeastern Colorado, including Denver, all the way up to southeastern Wyoming, becomes the mecca in the next 10 years of this industry. And I can say, I estimate there's about $20 billion worth of crypto custodians that are lining up to come to the state of Wyoming, and they can apply for their licenses as of October 1st. And so this time next year, I think we'll have about 20 billion. And if those 20 billion come in to Wyoming, there's going to be a big coattail effect, and others I think will follow.
Okay. That's fantastic. Are there companies, just for example, like Bittrex or Binance or Gemini or any of those major companies, if they wanted to rehome their center in Wyoming, they could do that and benefit from your laws that are advantageous?
Yeah, I don't think I'm giving anything away because Kraken's been pretty public about their interest in Wyoming. They've been at our last several blockchain task force meetings, and they are, along with IOHK, a big sponsor of Wyohackathon. So in addition to meeting Charles and Jeremy, you can come out and meet the Kraken folks, including Jesse as well, at Wyohackathon.
Okay, that's fantastic. And Philippe, I wanted to refer to an article for the sake of the viewers. Yes. We're going to link it down below. Caitlin is a senior contributor at Forbes, and we'll put the link down below where she refers to the 13 laws that Wyoming has enacted. And there's a quick summary on there that I'll touch on briefly. This is from Caitlin. This is a summary on the Forbes article where Wyoming recognizes direct property rights. So this is a summary of those 13 laws. Wyoming recognizes direct property rights for individual owners of digital assets of all types, virtual currencies, digital securities, and utility tokens, and applies the super negotiability rules of commercial law to virtual currencies. And there's more information on that. Wyoming also creates a fintech sandbox to provide regulatory relief to financial innovators from existing laws for up to 3 years. It is broadly reciprocal with fintech sandboxes both in the US and globally. There's a few more points on there. The next one is the Wyoming laws authorize a new type of state chartered depository, which you kind of referred to earlier, as depository institution to provide basic banking services to blockchain and other businesses. And the fourth point and last point I'll make here is it authorizes the first true qualified custodian for digital assets, which is a bank. Wyoming banks can start such operations as soon as September 1st, 2019. And we'll link that down below.
September, it's October 1st.
Okay.
October 1st.
Yeah.
Okay.
October 1st. Yep. Yep.
So
Yep. That's
1st.
when the application's open. It takes about 6 to 9 months to go through an application process to charter a new bank. So I just want to manage expectations. That's why I'm talking about this time next year. These folks will be here and up and running because it is going to take time, unfortunately. But yeah, we're doing it as fast as we can.
Okay. A personal question to you as a Wyoming native, since this is such a cryptocurrency friendly state now, have you seen like property values increase? Is there a possibility of this becoming kind of like a mini Silicon Valley for crypto projects, or is it like people are just setting up foreign LLCs and staying out, or do you see an influx of people moving in?
Yeah, boy, I sure hope so. I certainly see it. I left the East Coast where, frankly, a lot of people were also leaving. About a third of the homes in my neighborhood were for sale. And here in Wyoming, I'm hearing stories that, houses will be on the market for 3 days and they'll have multiple offers. I was in a bidding war to buy mine. So yeah, I don't know if that's entirely crypto related. You know, if your listeners want to come on out, most of you will end up flying into Denver and, you know, renting a car and driving up. You can fly into Wyoming as well, but a lot of folks fly into Denver. It's just easier because you've got more options. There aren't as many flights into the smaller cities per day. And so the reason I mention that is if you drive up from Denver, what you're going to notice is that the Front Range of Denver, Metro Denver, is essentially already expanded up to the Wyoming border. And, you know, Laramie and Cheyenne are just inside the Colorado border. So basically, they are now becoming sort of far suburbs of Denver. And it's, you know, only a 90-minute drive. It's funny, I think to myself, it's a 90-minute drive to the airport in Denver. I mean, I can fly out of the local cities too, but it's easier in most cases for me to just hop in the car and drive to Denver. It used to take me 90 minutes to get to JFK when I was living in New York, you know? So yeah. It's longer distance, but it's not that different in time. And I think what you're going to see is, because we're so close to the Denver metro area, it's not going to feel as rural as maybe some of you think it might.
Okay. I also, I'm going to switch gears now. That's very interesting. And we'll drop all the links below, and anyone is free to set up their LLC within Wyoming. And of course you're not too far from Colorado. So anyone can drive up there. I have to go visit. I've never been to Wyoming before, so
you're welcome to come on up. You know, the Metro Denver's creeping all the way up north, so that's what's happening. Yeah.
Sounds good. In one of your articles, you were talking about rehypothecation and what that means for individuals in Wyoming. Can you briefly describe what rehypothecation is to the viewers, and what is Wyoming doing to stop this process and make it as less predatory as possible?
Well, rehypothecation is a fancy word for musical chairs or three-card Monte or pyramid scheme. And unfortunately, it's legal in the traditional financial industry. What it means is essentially that financial institutions are allowed to sell you something that they don't own, which again, back to this good fences make good neighbors concept. If a financial institution can sell you something they don't own, then we don't have clear property rights, because what they're doing is creating more of the asset than the quantity of assets that actually exist. That's why musical chairs or three-card Monte are good analogies. More people think they own an asset than actually do. The rehypothecation is the process by which that happens. What happens is somebody pledges a loan as an asset as collateral for a loan, and then the person that has control of that collateral takes that collateral and pledges it for a new loan. So now you actually have two different lenders who think they're collateralized by the same piece of collateral, who think they're fully collateralized, but in fact, actually, they're now only 50% collateralized. In the US Treasury market, the IMF has estimated, really it's for global government bonds, that there are 3 owners of government bonds who think they own the bonds for every 1 government bond that's issued. So we have massive solvency holes in the traditional financial industry. And again, I think most of your listeners have common sense, right? If you're attracted to the crypto industry, you're probably attracted to it because a lot about it is actual common sense. And the whole concept of 1-for-1 asset ownership is something that I think is very common sense. But believe it or not, in New York, that's not what they recognize. They like to focus on regulating financial institutions for things that really don't matter in my mind, as much as the basic question, which is, if you put money into a financial institution, are you going to get it back? And in New York, you know, it's not guaranteed. In Wyoming, what we're going to have is provably solvent financial institutions. And on top of that, there was a Supreme Court case in Wyoming that actually charged someone for rehypothecating an industrial diamond with felony fraud. And the guy went to jail for, I think, 20 years. It was litigated all the way up to the Wyoming Supreme Court. So again, there's common sense here. You can't take an asset, pledge it for a loan, and then turn around and take the same asset and pledge it for a different loan. That's basic fraud. And unfortunately, it happens every day, and it's legal, which is why we didn't see the Wall Street folks go to jail. They've captured the regulatory structure and made these kinds of things legal. Lastly, I'll throw in, if you don't believe me, go type naked short selling and Uber IPO. It just happened a couple of months ago with the Uber IPO. The SEC actually authorized the underwriters in the Uber IPO to sell more shares than were legally issued. And this is not the normal green shoe for those of you who are sophisticated in Wall Street. The green shoe actually is legally issued shares. These were over and above the green shoe. Those were shares that were never legally issued, and Wall Street underwriters were allowed to sell them. And believe it or not, guess what? The IPO price collapsed, and a lot of folks lost money. And guess what? What they did was legal. This is the kind of stuff that makes me not want to keep my assets in the traditional financial industry.
Yeah. I read that kind of leads into, I read your testimony that you submitted to Congress or the Senate, where they asked you for your inputs on how this works. And you spelled it out very clearly for them about assets need, if they say this asset has a loan against it, it has to be there. Basically prevents the rehypothecation. Now, I don't understand it. I'm no expert on that, but I read what you wrote and I was like, wow, this is absolutely fascinating. So I encourage our viewers to read Caitlin's articles on Forbes.com. It's fascinating. She wrote inputs to the Senate or Congress. I think it was the Senate.
Senate, yeah.
For cryptocurrencies in the United States. They actually asked her for input. And one of them was about Facebook Libra and that it's backed, coin for coin, it's backed by a U.S. asset, a U.S. dollar, something like that. It's spread out through the Libra Foundation. And I learned that by reading your articles. And you want to make it clear to the U.S. Senate that it has to be illegal to not back it. Like they have to have it backed. And if they don't, then that's a problem.
Yep.
Okay.
Yep. And that's why, by the way, what's going to happen with these financial institutions coming into Wyoming, they have to abide by that law. In Wyoming, it's 1 for 1. You're not allowed to play this game. It's a felony if you do. And so I think naturally the depositors who don't want to hold their own assets, they don't trust themselves to hold their own private keys, or like money market funds and things that have to use a third-party custodian by law, they're going to pretty quickly recognize that Wyoming custodians are actually better than New York custodians for precisely this reason. It's going to take time, but I think it'll happen pretty quickly. People get it. And right now, New York has sort of rigged it so that we don't have a choice. When we're in the traditional financial system, we're all abiding by these 3-card Monte type rules and just praying that our financial institutions don't ever have a run on them so that the insolvency is exposed. But in Wyoming, you don't have to worry about that because these financial institutions are going to be provably solvent. Again, it's like valet parking or, a coat check. You get your coat back, you get your car back when you demand it, and you don't have to worry about the institution going bust or you getting caught up in their bankruptcy and having your assets tied up for a period of time. That's the concept. It's a powerful but very simple concept.
Yeah. You know what I like about this, Caitlin, is that you're looking out for the little guy. Like Philippe and I, we're holders, we're traders, we're the little guy. We don't have, massive backing, but these laws sound like they're protecting the individual who wants to make a deposit or make a trade. And the equivalent, I think the equivalent of what you're saying is we've had other people on our podcast who lived in South America and in Africa, and people would put their life savings under the pillow. Okay. Or they'd hide it. They'd bury it in a box. They'd put it in a box and bury it in the ground. Well, the equivalent of doing that on blockchain is if I put all of my funds on a ledger and I stick that ledger on my desk, okay, well, that ledger gets stolen. I lose my private key. And what Wyoming's offering here is that you can put your crypto in a real bank.
Yep. Regulated bank. Yeah.
And when you want to go get it, it is certainly there, and it hasn't been loaned out to somebody else, and it hasn't been bet on by somebody else. But basically, you can put your crypto in a bank. That way it's safer than being in your house. If your house catches on fire or burns down or someone steals your stuff, you lose your crypto. But you put it in the bank, you can
Yeah,
go
I
get
mean,
it out of there.
yep. Yeah, that's what the Wyoming laws are designed for. You know, I also would caution that, you know, nothing in life is riskless. If you hold your private keys, right, you have the risk of them being stolen, or, you know, a flood in your house and you can't read your handwritten recovery seat or something like that, right? So
what's
nothing is
common
riskless.
what's common is people download a virus or something, or a program that's targeted to steal their stuff, and it steals it out of their computer. But yeah, so there is that risk.
Yeah. Oh, a lot of that, right? So I don't want anyone to think that there's anything that's fail-safe. Nothing in life is fail-safe. But what it is a risk assessment. And what we've done is taken out what, in my experience, is the biggest risk of financial institutions, which is that they're just not solvent. Traditional financial institutions, they're not solvent. They're liquid. What I learned very clearly is that a financial institution can remain liquid for a lot longer than it is insolvent, right? So you may not know that your financial institution is actually bust. It only goes bust when there's the run on the bank, right? So what we've done is taken that risk away in Wyoming. I do want to say, though, you still have to look at the computer, you know, the IT security of the company, the operational security of the company, right? So they might not actually have great software and great security. So you still have to worry about their security. But I think what you're going to see is that there is going to be a differentiation between the institutions that are willing to come into Wyoming and abide by these really strict, investor-friendly, you know, hodler-friendly, mom-and-pop-friendly laws. And then everybody else who's in New York, or, you know, even South Dakota. I had a very interesting exchange with Mike Belshut, the CEO of BitGo. I'm trying to get him to come into Wyoming. And he was saying, you know, what's the difference between Wyoming's laws and South Dakota's laws? If you're really interested, go dig that Twitter exchange up. I think it was last weekend. And, you know, look, the folks that come into Wyoming are putting a stake in the ground. They're not playing games with your assets. And we'll see. But, you know, Kraken clearly has no problem with these laws conceptually. And, you know, interesting question for all of you to ask your other counterparties, the Coinbases, the Geminis, the Paxoses, the BitGos, all of them. I don't mean to single any of those out, all of them. Why aren't they in Wyoming? That should be your question. And if Wyoming's got better legal protections for you, and you know, you're not worried about the IT security of your provider, which state would you rather be in? A Wyoming-based institution or a New York-based institution? I know the answer to that. That's why I moved here.
Yeah. And I feel the answer to that is, where would I have more confidence? I would have more confidence if they were based in Wyoming and they were underneath Wyoming laws. I would have more confidence that they would be compliant and looking out for the individual in that sense. Right. I also noticed in the Twitter exchanges last week that Nevada, just a few days ago, that Nevada jumped on the bandwagon. They enacted a bunch of laws, and I'm assuming that it was the influence of Wyoming that caused Nevada to jump on the bandwagon. Is that a fair assessment?
Yeah, maybe some of it, but I got to give Nevada credit. They were one of the first ones to clarify that there are no crypto taxes at the state level in Nevada. So a lot of folks moved there, I think in 2015, as soon as Nevada clarified the state tax. Nevada's another one of the US states that assesses no state income tax. So just clarifying that, you know, there's no income tax and property taxes on, I believe no property taxes on crypto in Nevada, brought a lot of crypto folks there.
Yeah, and they're sucking all that money in from gambling, so they could pull it off.
Yeah.
Rick, I think we should move to the Reddit questions, but I had one quick question from the Cardano community before we start. If you're familiar with a lot of what's going on within the Cardano project, it's a proof of stake protocol, and Shelley is releasing towards the end of the year. So people are going to be able to stake their coins, delegate to a staking pool, and ultimately earn staking rewards for backing the system or verifying transactions on the ledger. So for proof of stake protocols, even for proof of work, if you're mining Bitcoin and you have a mining operation or you're staking in Wyoming, do the laws, are they friendly towards you earning rewards and maybe, like, for example, you not maybe cashing it out, but would that be viewed as income? I've never gotten that answer. And I don't know if that's a question outside of your jurisdiction or outside of what you can talk about, but Yeah, that's my question.
Yeah, it's a very good question. I can't answer that because I can't give tax advice. But I will. I'm so glad you brought this up, because one of the questions that some folks ask about the Wyoming laws is, wait a minute, how do I join a staking pool? Right. So for staking coins and pooling together to enhance your returns from staking, there are a lot of incentives for you to go into staking pools. So can a Wyoming financial institution offer staking as a service to its depositors? And the answer is yes. When you stake your coins, of course, you're turning them over to the pool. So therefore, it's not like the valet parking concept anymore. If you want to join a staking pool, because you're going to get enhanced returns, you are going to be taking some risk. But what's cool about it is that you, as the staking pool, get all the gains in the way the Wyoming law works, and you have to be disclosed that there are risks. But the service provider, the custodian, is prohibited by law from taking staking gains without disclosing to you what they're taking. So even the whole staking approach for staking coins is so much fairer to regular folks in Wyoming. Absolutely, the service providers who provide the technology and set up the pools should be paid something for that. But you're going to have transparency right now. When you participate in securities lending, for example, in the traditional securities industry, there is zero transparency. You're going to earn some extra income, but what you don't know is what your broker's keeping. There's no disclosure of whether they're getting 90% of the economics or 10% of the economics. No one knows, because there's so much complexity in those markets that make it easy for them to hide. So the concept that we had in Wyoming is, we're not going to prohibit participants from choosing to pool their coins to enhance staking gains. But if you do that, it's just going to be done on a fair basis. So again, I think the fact that IOHK put down its stake here, pun intended, in Wyoming, I think is a very cool endorsement that they also agree with what we're doing here conceptually.
Okay.
And we know IOHK has a lot of smart people. So if they made that move, they probably did it for a very good reason.
Yes. All right. That was a great response. So Caitlin, we're going to jump over to the Reddit questions quickly. We have a few Reddit questions. Perfect. So Rick, do you want to start off with the Reddit questions? I sorted by best. So, and I believe we start from Tony from Shoshone, our frequent flyer.
Awesome.
Yep, that is correct. All right. So I'm on Reddit. And sort by best, I'm on Tony from Shoshone. All right, so Tony from Shoshone asks, this is almost too good to be true. My favorite podcast hosts interviewing my favorite crypto influencer, talking about my favorite annual event at the Wyoming Hackathon, Wyohackathon. Jesse and I, along with our students, can hardly wait for the upcoming Wyoming Stampede. Can you give us just one more teaser about what to expect at this year's hackathon? Thank you, Tony from Shoshone. We appreciate that. So any more teasers, Caitlin?
We've got a bigger prize pot, and we're already far ahead. We had 400 developers last year. We're already far ahead in registrations this year relative to last year. So I think it's going to be the place to be on the weekend of September 20th through the 22nd. We're also going to have a gaming track. A lot of folks, I think, are going to be interested in the gaming side of things. So come on out.
Okay. Can you imagine them bringing a bunch of students up there and you have cots and pizza and Mountain Dew all night? Oh my gosh.
Yeah.
Oh, that's what it was last year. Marshall Long, actually, he can't make it this year, but he advertised, he said this was the most authentic hackathon that he attended last year.
Wow.
Tony's going to have his work cut out for him.
Oh yeah, I think he's probably bringing more students, and Jesse too. Jesse is his colleague, another teacher. So shout out to both of you guys. You guys are awesome.
Yeah, that's
incredible. Set an incredible example that it's just above and beyond. My mom was a teacher in a rural school, and boy, that when teachers are special like you guys are and go that extra mile, it has a huge impact on students' lives.
It is. I love seeing young people get involved in this.
Oh yeah.
Fantastic.
Yeah. And code doesn't care whether you're a male or female, where you live, what background you have. It's just, it's a great equalizer. I love it. I love what Joe Lubin said here last year. There's no reason why the next Google can't be invented in Wyoming, because nobody really, you don't need to be in the same place, right? A lot of these companies are virtual. And so, there's no reason why a high school student from Shoshone, Wyoming can't have an unbelievably successful business, and you'd never know that that person was living in a small town. It's so awesome.
That's great to hear. Yes. Yes. Thank you, Tony from Shoshone. That was a great question.
And Jesse, yeah.
And Jesse and Tony from Shoshone. The next question comes from Professor Smith 9000. And the question is, Caitlin, do you see Wyoming as being a potential leader in tokenized real estate? If so, what advantage will Wyoming have over other states?
Yes, we already are. Two things. Teton County, which is where Jackson Hole is located, the famous Tetons Mountains. Teton County actually worked with Medici Land Governance to put the county deeds on a blockchain as a pilot project, and it was incredibly successful. I was on the demo call with the county clerk, Sherry Daigle, who's very forward thinking, and she was really blown away. She tested them to be sure they got everything right. And there were details that they picked up that she didn't expect them to, that they did. So shout out to Medici Land Governance and to Teton County Clerk Sherry Daigle for doing this. Where does that go from here? Now, how do we take that into production is a very good question. The second thing I'd share is that at the Wyoming Blockchain Task Force, we just talked about making real estate deeds tradable. It's going to take a while, but we actually believe that's already legal in the state of Wyoming. That already can be done. So you just have to get the deeds recorded on a protocol, and that if the county clerk is willing to make those tradable and dip toes into the water, I think it may be a few more years before anything happens like that. But sounds to me like Wyoming's going to be the first.
Okay. Sounds good. Sounds good.
Hope you pull it off.
Yeah.
That would be interesting. Making real estate deeds tradable. You could trade anything. I thought Pokemon cards were great. And now you trade real world objects.
Yeah. Well, it's also interesting because, Wyoming's a cattle state. And so the making the individual cows tradable and financeable by tokenizing the individual cows is something that some folks are working on here as well. So we can help the ranchers not have to be so beholden to traditional forms of credit and allow them to sell a token in a cow, so that an individual investor can help the rancher finance their working capital. That's a pretty powerful concept too.
That is, it's fascinating, the ideas that people come up with to use blockchain for.
Yeah.
So yeah.
But those are real world examples of, a cow is not real property, but it is personal property that gets registered in the same way that a real estate, well, not exactly the same, but similar in the way that real estate's registered. So we're trying to make them all tradable. Yep.
Yeah. Kind of like a car, I guess. So what's our next? Thank you, Caitlin, for that answer. And thank you, Professor Smith 9000 for posting your questions here. The next question comes from Digital Duster, and Digital Duster asks, Caitlin, how will the trust asset protection and lien cleansing process work? Will it be custodial, and would we have to transfer crypto to a custodian or crypto bank for 2 years? Or will we need to register crypto addresses with Wyoming State and provide a KYC to the addresses? This is a multi-part question. And the last part of this question is, what banks will participate in custodianship and where to find out more about custodians? Thank you. So there's a lot to that.
As I mentioned before, the way,
Sorry,
as I mentioned before, the way to locate the coins in Wyoming is to have some physical nexus, or to be, located yourself in Wyoming, or your business to be in Wyoming, or you deposit it with a with a Wyoming-based custodian. So if you've got cold storage hardware, or even your piece of paper where you write down your recovery seed, and it's in the state of Wyoming, you automatically get the benefit of the lien cleansing provisions. There is no requirement whatsoever ever to register your crypto with the state of Wyoming. So there's no, the state of Wyoming doesn't have anything to do with, you know, tracking public key addresses or anything like that. This is just that, you know, you can always prove if somebody comes after you someday because you bought a coin that was subject to a lien and you unknowingly bought that coin subject to a lien, you'll be able to show a judge, hey, it was in the state of Wyoming, you know, tough luck to the borrower, it's mine, and you'll be able to win on the merits of that. Not a very likely scenario, but it's the kind of stuff that, you know, those extreme edge case type scenarios are the things that institutions in particular really care about. So I hopefully I answered those questions. Oh, I guess the last one is when. As I mentioned, these banks aren't going to be able to apply until October 1st. It takes 6 to 9 months for them to get their charters. So I think second quarter 2020 is the earliest date on which you'll see them open up, and stay tuned, because I think around October 1st, you may actually see some announcements by crypto companies that they've actually applied.
This is great advanced information, so that when we see those companies out on Twitter and out on the public information line saying, hey, we relocated to Wyoming to take advantage of this law, then people will know, hey, if I invest there, I'm better protected by the state laws. That's fantastic. All right. Thank you for the answer, Caitlin. And thank you, Digital Duster, for the question there. Philippe, you want to take the next one?
Yes. The next question is from Dwayne C23. And Dwayne asks, Caitlin, how do you see the regulatory environment shaping up to handle the differences in use cases, value propositions between a Bitcoin commodity versus a general computing platform like Cardano or Ethereum, specifically in regards with decentralized finance and the introduction of real assets on the chains, such as STOs, tokenized real estate, bonds, arts? Curious to see your take on this matter and where you see the regulatory environment progressing for utility platforms enabling these use cases.
Yeah, great question. We are, as I mentioned, crypto agnostic, and our laws are broad enough to cover not just the commodity type coins like Bitcoin, but they're also broad enough to cover the use, as you say, the general computing platforms like Ethereum and Cardano. Our utility token law was the first in the country in 2018, which essentially said, look, these tokens that are issued through blockchain-based platforms that have a primarily consumptive purpose are not securities under state law. Of course, the states can't solve the federal issue, so the SEC is still involved, as we know, in those. But we've recognized all of these general computing platforms, and again, from the custody perspective, I think you'll see we're reasonably future-proof. Only time will tell for sure how well we did it, but we anticipated all the staking coins as well, and the different structures. We had great input from folks like Kraken, who really understand this industry and can see where the puck is going to be as opposed to where the puck is on the hockey rink today, and helped us future-proof them. Okay,
that sounds good. So even though Wyoming is more progressive in that point, like, for example, there was a whole controversy recently with Binance and Bittrex demoting US customers from trading specific altcoins, and you can't access them. So, you know, US customers are out of luck unless they're using a VPN. I'm not suggesting that to anyone, of course, not financial advice. But Wyoming, even though they're friendly towards those other altcoins, it's still on a federal level that they need that federal clearance before things progress, if I'm understanding it correctly.
Yeah, that's right. The federal laws within the United States borders for securities still apply.
Okay.
So, you know, we're doing everything we can as a state. One other thing I should have mentioned to your earlier question from, I believe his name was Dwayne, was we actually are proposing a bill for the upcoming legislative session that would have a blanket liability protection for developers in open source software programs, projects. Now, what can a state do? You know, there are a lot of people who say, look, code is speech. And there is a distinction between those who write the code and those who use the code. And since code is speech, which I am sympathetic with, the First Amendment protects it. But then the question is, you know, are the developers going to be liable? So this is getting at, you know, DAOs and other type of organizations where there's not a person involved with the entity. And how can you make sure that the developers who write the code that contributes to those projects aren't going to be stuck with civil or criminal liability? So that's our way of trying to get to, all right, a state can actually, you know, make a little dent in these federal laws where the feds can always go after the users of the software, but the folks that write the code, if they don't use it, are hopefully going to be immune. We're working on that. We figured that that's one way we can help, you know, clarify some of these federal issues. But unfortunately, inside the United States, federal securities laws do reign supreme. The states don't have primary jurisdiction over that. It's the feds in the securities regime. But interestingly, just to fill that gap, the states actually have primacy over property law. Feds have primacy over securities law. So if it's not a security, it falls back to the states, which is why our utility token bill that we enacted in 2018 is so important for the general computing platforms.
Okay.
Yeah, I noticed in your testimony to the Senate that you had mentioned that where they're treating cash, traditional financial system differently than they're treating the digital currency system, and that the incumbents have an advantage over the new technologies, and that the federal government is they're delaying progress, and they're inhibiting commerce by not getting on board with the new technologies. Basically, the gist I got from your testimony in that subject area was, you know, money is money, and you're just treating this type of money differently, and you're inhibiting commerce by not allowing the same things you're allowing to happen on traditional money.
Yeah, and I completely agree. Yeah.
Yeah, that was a brilliant article, and
thank you.
Yeah, I think it was relevant here in a sense that they're treating cryptocurrencies differently. And,
yeah, you know, it's interesting that the Trump administration, there's a very interesting battle going on in the administration between the Wall Street types and Secretary of Treasury Steve Mnuchin is a Wall Street guy, right? He came from Goldman Sachs. And then the more property-oriented types like Steve Bannon, who was an advisor to President Trump. Regardless of what you think of President Trump, when I look at what he's actually done, he's deregulated a lot of the economy, except in the financial services industry, where he's actually gone deeper with regulation so far. And he supported the Wall Street wing here. So when he came out and attacked crypto a couple of weeks ago, you know, that pretty clearly came from his pro-Wall Street types. And of course, they want to use the regulatory regime. They've captured it, you know, to keep their insolvent system superior. But what I tried to explain to President Trump was you don't have to choose between the two. Just you know, the dollar can coexist with these other systems. There are going to be a lot of places where people are going to prefer the dollar, but it's not a dichotomy. It's not a choice. And yet, if you allow these Wall Street types to try to block development of crypto at a federal level, all you're doing is just disadvantaging the United States, because it's not going to stop, right? We all know these technologies are not going to be uninvented, and these networks are never going to go down. I loved being at a conference at the Magical Crypto Friends conference in, I think it was June, and watching a demo of a ham radio Bitcoin transaction. So even if they managed to shut down the internet all around the world, you know, somebody actually did a ham radio Bitcoin transaction. So you're never going to shut it down.
Yes, and for I'm sorry. So for those of you young people out there, Caitlin and I know what ham radio is. That's high altitude modulation. The radio waves will go around the planet, and you only need 2 stations, and you have a network. You could have a ham station in Russia and a ham station in the United States, and they can communicate. So you could basically send it point to point, ham station to ham station. You can't shut that down.
Yeah, and Blockstream's got a satellite up there running a node. You know, I wouldn't be shocked if by now there are more that we just don't know about that are using satellites. So you're not actually using the, you know, wired connections and ISPs down on Earth. So, you know, look, there's just no way governments are going to shut this down. It's just unfortunate that the United States is letting the the Trump administration is letting its pro-Wall Street wing win.
You know, that's unfortunate. I wanted to add something or ask you a follow-up question, because it seems like, you know, the government is still pro-Wall Street, which is disadvantageous to the individual investor. We're getting squashed again. The system is insolvent. It's being propped up. It's fake. We're in $23 trillion of debt, and we're still making the wrong decisions as far as moving the ball forward. So do you think that there's going to be a time, the United States is still the strongest country in the world, are we going to fall behind if we do not get that ball rolling? Do we have a deadline? Because I feel like there are other places that are being more progressive, and then they're going to get the ball rolling a lot quicker than us, and we're going to fall behind the bandwagon. Is there an issue with timing here?
Yeah, you know, I'm going to wax a little philosophical here. The cool thing about crypto assets is they're equity-based assets. They're nobody's IOU. If you own them outright, if you choose to self-custody the asset. And so, you know, a US dollar, pull it out of your wallet, it says pay to the order of. It's an IOU. Same thing with euros, any fiat currency. It's a debt-based currency system. So I think the interesting question is, you know, who's going to end up with the majority of these equity-based assets at the point in time when these debt-based assets no longer matter? And Saifedean Ammous talks about, he's not sure there's going to be a terrible collapse of the debt-based systems, because people will just opt out of them and starve the beast. And it may happen gradually. It's not like we necessarily think something bad is coming. So it very well could, because to your point, it's an unstable system and it's inherently insolvent. So it could actually collapse tomorrow, or it could go another 50 years. We don't know. But as more and more people become woke and actually start realizing they have a choice to opt out of this system into which previously we've all been forced. And this is a global statement. It's not just about the US. Everybody's been forced into the same basic structure, which is our financial assets are all IOUs, and our money is an IOU itself. So now we have equity-based assets we can own. The real power, I think, is going to be who owns the majority of those equity-based assets, which is part of the reason why it's crazy that the United States is throwing up all these barriers in an attempt to try to prop up that old debt-based system. We should want to have more of these equity-based assets. And your listeners are probably scratching their heads saying, you know, what does that really mean? At the end of the day, money is just a ledger. It's just a scorekeeping system. It's all about, you know, I want a certain entry in that ledger to represent the value that I've generated in my lifetime, and I want that ledger to be fair. And a fair and honest ledger is one that is equity-based, it's nobody's IOU, and it's one that has a finite number of slots in it. And so what that really is getting at is who's generated the real economic value in the world. And when you generate economic value, you want to keep your score on a fair and honest ledger. And this is why, you know, keeping score on these dishonest ledgers, such as the debt-based financial system and debt-based money, I think people are going to, as they become woke, are going to opt out of that. And I just hope the United States, which is just simply because I happen to be an American, you know, doesn't shut that down for people, or try. We already established they can't shut it down, but they can certainly make it harder. And I will say, Wyoming is going to be the place that is where you're going to want to be within the United States, because we're taking a big stand on this. In fact, Governor Gordon just signed a proclamation a couple of weeks ago that literally used the words, making Wyoming the cryptocurrency capital of the United States. When have you ever heard a government official say something like that? It's so awesome.
Yeah. That was a beautiful response.
Yeah, I'm glad one of them did it.
Yeah.
Yep.
I saw
Again, that Rocky Mountain arc.
Yeah. Yeah.
Yeah,
I like
Governor Polis in Colorado has done some similar things too. Anyway, yeah, sorry, go ahead.
Oh, no, it's because I like how it did the proclamation. Laws can be very hard to read for people like me, but the governor published a proclamation that describes in simple terms what the laws do for you, the individual. So if anyone hasn't seen that, I'll see if we can get a link to that put down below, because it puts it in more layman's terms as opposed to the legal terms. All right. So let's, Philippe, are we going to the last question there?
Yes. Let's see. I see
the
comment was deleted.
No. So the next one down was from a Telegram user that I posted in there.
Oh, okay. So that's you. Okay. You can read it. That's fine.
That was from Telegram user BV asked, essentially, my question for Caitlin is, it's often talked about in the Cardano crypto space, blockchain's effect on the insurance industry. New topic here. That's a good question. I'd like to know exactly what Caitlin's take is on it. I know it seemed under the Michael Parsons Cardano Foundation, that's the only thing they seemed to do was host these video calls talking about insurance briefly, but obviously nothing ever came with it. So the key question here, so this person, BV, works in commercial insurance, and I don't seem to really see what exactly crypto or blockchain can do that will totally change the game. So it's like an insurance industry related question. What's your take on that, Caitlin?
Well, believe it or not, I have an insurance background. I used to run Morgan Stanley's insurance subsidiary and have been an officer of several insurance companies in my past life, as well as pension plans, which is really just a form of life insurance. But I haven't. I'm kind of with your reader there, your listener. The insurance industry is not as obvious a use case as securities and banking payments. For these technologies. There are a lot of administrative costs that obviously can be taken out of the insurance industry. So much of it is still done in paper form. And same thing with like the mortgage lending industry, right? So much of that process can be done with smart contracts and cut out cost. But the real cost, at the end of the day, is that really going to show up to an individual? Yeah, it may make your insurance, 10% cheaper, but it's not going to be a game changer where all of a sudden it's 90% cheaper. In payments, it can be 90% cheaper to use these technologies. So I think that's why the insurance industry is slower. Believe me, I've got that background. So I was thinking, like, can this help solve the pension problem? A lot of companies still have paper records for their pension plans. This technology isn't going to solve that, right? We were talking earlier about a lot of the deeds still being in handwriting in paper in books in the county clerk's office. You got to digitize that stuff first before you can then start using these fancy database technologies and applying smart contracts to them. So I think the insurance industry, there's a reason why it's being talked about less there and why it's slower. Eventually it will help cut administrative costs, but thinking about the property casualty side of things, the loss ratios are typically the majority of the cost. In other words, the insurance companies are not raping us all. We all think they do when we buy our auto insurance or our homeowners insurance or our renters insurance. They're actually paying out a majority of those premiums we pay in the form of losses to their customers, and their administrative cost is not the majority of, or their profit is not the majority of the premium dollar that we pay to them. So I wish it could help. I think the healthcare industry, the administrative costs are much higher than in the traditional commercial and life insurance industries, but it's not a magic bullet for insurance. Very astute question.
Okay. Yeah, and that jives with what I also told him as well. Is I thought, insurance works fine in a centralized environment. There's no need for blockchain. The key to blockchain is it needs to solve a problem. If there's no problem there, you don't need a blockchain to solve a problem that doesn't exist. Which is what I learned from other people in the crypto industry. I didn't make that up myself, of course. But thank you, Caitlin, for that answer.
Yeah, if I could just add that information sharing from between organizations. There, like what I did with Symbian at Vanguard, which has obviously been taken to many nth degrees since I haven't worked there for 18 months. You know, that's all great. When organizations need to share data and they need to trust that it's valid, you can use these, you know, Hyperledger type blockchain systems for information sharing, and that definitely can cut some costs. But like you said, it's not a game changer.
Rick, the answer. Thank you for PV for that question. And Philippe, that's all I have, sir.
Yes, yes, that's it. So we're going to wrap this up. Thank you to all the Reddit questions. Thank you to all the Reddit users. Thanks for everyone for the support for this episode. We appreciate Caitlin. Thank you so much, Caitlin Long, for appearing on the Cardano Effect podcast. Is there anything that you want to say? Any last words to the Cardano Effect viewers and listeners?
Come to Wyohackathon, Wyoming Blockchain Stampede, September 19th through the 22nd, Laramie, Wyoming. Come meet Charles and Jeremy.
Sounds good. Sounds good. We'll put that all in the description below. And Wyoming seems like a great place to go live if you are very crypto friendly. So definitely something we're going to retouch on in future podcast episodes. You're welcome at any time. And once again, thank you to everyone for tuning in today. We appreciate you. Until the next episode of the Cardano Effect. Bye, everyone.
Bye.